Hello, welcome to this week's How's the Market, Pensacola. Well, the market's nuts and everything's going to go to, well, in a handbasket. Yeah, okay, no, that's not the case. Shut up. All right, so there's a lot of noise out there. It's one of the reasons I'm kind of glad I did this show starting 2-3 years ago. All right, it was April of 19 when I started this show because I wanted to document. A lot of you guys heard me saying last year I feel like a parrot. It's a hyper-seller's market, hyper-seller's market, hyper-seller's market. Now we're starting to see some changes. And so now all these stuff's coming out, right? Hey, we're going to have a foreclosure crisis. Or, one of the big ones that I heard, 1 in 4 properties last year were bought by an investor. Or 1 in 4 properties, I think it was the first quarter of this year, where it's bought by investors. So that's why house prices keep going up. That was actually a misquote. Remember, I've always said, watch your headlines, watch your premise, and watch your conclusion off of that. What are they drawing off of that premise? No. Basically what he said, and him being Dave Ramsey, I quoted him a couple of weeks ago. I actually played a clip from his show. What Dave Ramsey said is 1 in 4 multifamilies units were bought by investors. Okay, well, let's look at that for a second. Let's critically think through that for a second. If I do what's called a house hack, I'm teaching both my kids how this works right now, okay? If I do a house hack, let's say I, as an owner, go and buy a duplex, a triplex, or a quad, 4 units, right? All 3 of those, you can use owner style lending. So you can use FHA, VA, conventional style lending. You don't have to go to commercial style lending until you hit the 5th unit. Well, 5 units and above is still considered multifamily. Well, of course, that's going to be investors. Of course it would be. We don't have a whole lot of owners. Right now there's a bunch of us going in together. We're picking up a couple hundred units out of Houston. There's not going to be a bunch of owners doing that. That's investors doing that. Okay. But even those duplexes, triplexes, and quads, let's say one of my kids goes and buys a triplex, rents out the other 2 units to help pay for his mortgage. We call that in the industry what's called a house hack. I forget who coined that. House hacking. So basically, it almost wipes out your entire payment. And I've seen some other people do this with single-family residents that were single. One of my clients literally would buy a 4-bedroom house every other year, rent out 3 of the rooms, and just live in one. Right? He had no mortgage payment. It's a good idea. Single guy, he just rented it out to the other military because he was military as well. But would that be considered an investor? Probably. So multifamily units bought by investors makes a ton of sense. Okay, 1 in 4 houses? No. The other thing that he was bringing up was 1 in 4 lower priced houses. So your lower price points, sure. But what that happened is that people forgot that caveat. And so now it's like, oh, BlackRock or, some of these big hedge funds. 1 in 4 is buying up all these properties. They're raising the rent. They're raising the values. This is never going to stop. We're never going to be able to get ahead. Blah! Shut up. That's not the case. Are there some investors out there buying real estate? Sure, I'm one of them. All right, people put their money where it's working the best. Right now, real estate's actually there. I think most people, most wealthy, have either made their money or hold a good majority of their money in real estate because it's a tangible asset. So it's different than paper, which is your stock market, your bonds. You need to understand that stuff. You need to give yourself a financial education, but they hold it in a real tangible asset. All right, there's a whole lot. The taxes are built around owning real estate, so where you can get taxable advantages of depreciation, recapitalization of that doesn't have to necessarily happen because of a 1031. I can go on and on and on. Okay, but what I want you to understand is quit being so afraid of this market right now. Buyers, I had a buyer one time come in this past week and said, hey, I'm going to come in, $30,000, $40,000 under asking price for a $250,000 property that's been on the market for a day. You're not going to get it. You're just not. Well, it's 2008. They'll take my offer because they'll take anything right now. What have you been watching? What have you been listening to? What have you been reading that thinks that's going to happen? I'm showing you numbers on this show of what the list to sell ratios are at each price point. What are inventory levels? What's our list to sell ratios? There's a lot of other data on this thing that if you pause and actually look through it, you can see. I go over all of the data when I'm talking with either a buyer or a seller, but I try and show just enough on here to where you guys can get an idea, at least a heartbeat of the market here in Pensacola. without going into too much detail, or else it's be a 2-hour show. And I don't think anybody wants to see me for 2 hours, because that would be considered a horror film. Anyways, let me give you a little education of why we still have a supply problem. All right, I'm going to take you down to my screen real quick. I'm going to show you a couple other things. This is an actual graph of what builders built in a 50-year average. Okay, the average annual units completed of builders building single-family residences. And as you can look, okay, right at 2005, it started to drop off. That was that crash, right? So now the depreciation was happening too quick. Too many builders actually went upside down, got caught with loans that were too extended, went out of business. And then we also had lenders that just stopped building stuff, all right? The neighborhood I live in, the first couple of houses were built in 06. They started building again in 16. All right, so there's only 30, 40 houses in my neighborhood, but the first 2 or 3 were built in 06. Now it's 16, 17 is when they started building again. So it just happened there. And if you notice, we've got 14 straight years to where we are below the 50-year average. So we've got less inventory coming on the market. This is just on the builder side. We're not even talking about resale right now. And this is a national average. So think about it. I'm not even talking about all the migration to my state of Florida. I'm just talking about a national average right now. So this is one of the reasons we have this problem. We've got a very low units completed, and then we jump over here to the population by generation of who's buying. Millennials are going to continue to keep the market moving quite along because they're in their peak buying years. If you look at this, 25 to 29 is in peak home buying years. They're actually, 20 to 35. That's pretty much the millennials. Gen Z's starting to get there. All right, starting to get there. So 1997, they're turning 25 this year. All right, so they're starting to get into this point. But for the most part, it's millennials that are buying that. Everybody thinks the millennial generation just wants to rent. No, they're actually fueling a lot of the buyers because they want to buy. They understand that's where a lot of wealth has been given, especially the last 2 years. You talk to a millennial right now, they're like, well, I know 2 years ago this house was worth $200,000, now it's worth $325. I want to get in on that. How do I start doing that? So they are actually fueling a lot of our buying. That's nationally. Now, couple that with here in Pensacola, here in Florida, we've got a migration from a lot of other states into our friendly state, right? And our population growth is exploding. So now I've got a supply problem. I don't have enough builders bringing on enough supply, and people reselling are not coming on the market as fast as they should. I've got a buyer demand that's still high. Look at this generation right now, the millennium generation. And we've got a buyer or a population boom. That's a trifecta. That's the perfect storm. It's actually the perfect storm. That's one of the reasons real estate right now in our area is probably going to stay put, increase. I don't know that we're going to see double-digit returns. We may see it this year, 2022, just because of the first half of the year. So when it all averages out, because we saw from January to June, we saw a spike, right? But when it all averages out, we may see a double-digit. Do I think 2023 we're going to see a double digit? No, I think we're going to go back down to the single digits. Mid to high single digits, and then 2024, as long as things are continuing the way they are right now, like the Fed's probably going to raise rates again this week, everything else, we're going to see the appreciation get back to a, wait for it, normal market, not the abnormal market we've had lately. So there's at least a little history lesson on what's happening and a good macro view. There's your, hey, from the airplane looking all the way down, this is what it looks like, and this is why. So we're talking about inventory levels. Let's get over to our 2 counties and see what they look like right now. Let's go. All right, if you don't know, I always start with this slide right here. It says if we have between 6 and 7 months worth of inventory, we have what's called a neutral market. Anything greater than 7 months considered a buyer's market. Anything less than 6 months considered a seller's market. What the slide doesn't say, Anything greater than 9 months, hyper buyer's market. Anything less than 3 months, considered a hyper seller's market. Jump over to Escambia County. Didn't go up in inventory much. I think last week we were at like 791 or 792 or something like that. We went to 795. So I told you guys, watch like right after Labor Day. Things will start to change a little bit. We're not there yet, but we only went up 3 properties. Now, it's probably because some of them went pending. So remember, some of them are coming off because they're pending. But we got 795 active. Same breakdown down here at 550,000 plus. We're starting to come out of the hyper sellers and into just the sellers. But what I want you to notice is from 400,000 to 550,000 is now over 2 months inventory. So we're starting to see some inventory levels at the higher markets. And this is what it'll look like when we come back to a normal market. I'll see some yellows and some blues and some greens. Yellows will be neutral, greens will be buyers, blues will be hyper buyers. You'll start to see that. Go back and look at some of my shows from April 2019. You'll see these high points had yellows, greens, blues in it, right? And then the low points were the reds and oranges, okay? So we got most everything has gone over a month's inventory. So even our lower price points where everybody's like, well, 1 in 4 investors are buying. Okay, well, even those are starting to go over or at 1%. They're out of the under 1%. We still got a long ways to go. Watch your headline here, because 250,000 to 300,000 was a half a month's inventory a few months ago, and now it's 1. Inventory levels double. We're going to crash. Shut up. We're still at 1. And here's what I was pointing out. Things are still selling for 100% to 101% a list. Okay? You're not coming in at $200,000 or $250,000 and offer them 210. 3 days on the market or a day on the market, and shut up. You're not getting that. You're not going to get it. Okay? And as a seller, you don't have to take that offer. There's a lot of fear on the seller side right now. All right, like, hey, I may have missed my window. Well, you might not be able to get quite as much, or you might not be able to get the concessions that you would have got, like an appraisal waiver or things of that nature, but you still can make a good profit. You still can make a very good profit in this market right now. The only one under a month's inventory is the 150,000 to 200,000, and that's 0.9. I suspect that will probably go over a month's inventory next week. So we are seeing an increase in numbers in Escambia County. 98%, 150,000 or 100,000 to 150,000 is selling for 98% of lists. So you're starting to get a little negotiation there too. Okay. Plus some of those they need some work. Let's jump over to Santa Rosa County, see what we got looking like. 601 active. Remember when that was under 300 not too long ago? So we've doubled in inventory, but we still got very, very low inventory. There's nothing under 100,000 in Santa Rosa County. Nothing. And about the same breakdown. 550,000 to 600,000 is almost 4 months inventory. So we're out of the hyper sellers into just the sellers. Your luxury is 700,000 plus is 4.1, so the same thing. Besides that, everything else is pretty much a hyper sellers. You do have this 450,000 to 500,000 at 2.9, so it's right there on the cusp. Now, why would I actually bring that up? Some people would say, okay, do you want to market it differently? 700,000 plus right now, I would market slightly different. I wouldn't market as a hyper sellers. I would try and differentiate. There's some changes that have happened. Okay, so we need to change how we market the property as a seller. It's also change how you buy. All right, these things are selling 98% of list. Okay, so does this mean we're starting to get some concessions back? Do we have to offer somebody $750 if they're asking $750? Maybe not. Can we get it for $600? Probably not. All right, am I going to say never? No, because, well, there's all kinds of situations. I had a situation a few years back. Somebody was asking, I forget, I think it was $600,000 and the buyer offered $450. I had no problems writing that offer just because of the market at that time, right? They'd been on the market for 4 or 5 months. Great property, waterfront. It's well over $1 million now. But, I was like, it's kind of low. And even the buyer said, yeah, well, I'm expecting them to counter, but let's start there. Well, I came back with, the listing agent came back with a completely signed contract, no counter. So out of 600, they took the 450. And he told me, he said, you're not going to believe this. I said, what? He said, they just finalized their divorce, and the last thing holding them together was this house, and they just want to be done. So they accepted his offer at 450, even though I knew, as a buyer, he was willing to pay more. He was expecting them to counter and was, because we had already had that conversation. Let's go into this negotiation being prepared for this. They took it. So will people take it? And that's a different market though. That's not right now. You're not. The likelihood of that, the statistical likelihood of that is minute, to say the best. Say the best. I think the saying is to say the least, but yeah, whatever. Anyways, 601 active. Looks like pretty much everything's hyper sellers. But again, we're starting to get over a month's inventory, even in Santa Rosa County. 250,000 to 300,000, slightly under a month. That 150,000 to 200,000 is still 0.3. There's not but 4 active. 100,000 to 150,000. Even though it's 0.8, there's only 4 active. That one, if you notice, is selling 94 to 96%, and that is because of the condition of these properties. So pay attention to those. That's our numbers there. Always in the show talking about our instant offer program. Just actually closed on another one Friday because the guy was been working for his insurance claim almost 2 years now. Has already moved, was just getting tired of making the payment, waiting on the insurance company. It was almost eating into his profits just because he had to keep making the payment. He couldn't rent the place because it had a hole in the roof. So there's a lot of things done. So we just closed on that property. Friday, we're starting to work on that to get that renovated up. Instant offer program basically is if you come across something or if you have something, either you inherited or there's a lot of work that needs to be done, you need to move quickly. I can come in and give you an instant offer on what the property can close at in 10 days, 15 days, 30 days, whatever it is for you. All right, whatever it needs to happen for you. So I can give you that offer like, okay, we don't even have to test the market. This is what we can offer. So you can walk away with this. You know this is kind of a floor, and some people will use it as that. Either A, if that number satisfies them, that accepts and gives them what they're looking for, they'll take it and move on. Some will take that as a floor, come on the market and see if we can get more. If we can't, we already have this ceiling here. If we can bust through the ceiling coming on the MLS, great, let's do it. If not, then we've got that ceiling there. We've got that offer already in place. So you come on the market with a lot more confidence that you're going to at least get this. You come on the market, we find out if there's any more. If there is, great, you get it. If not, then you don't. But at least now you have what's called an instant offer. And I'm not talking an instant offer from a national institution that's now going to have to send 3 inspectors out there. No, I'm giving you an offer now that's solid. There has literally only been one instant offer since I started this program 2 years ago that we could not close. And that's because we found out in the inspection, we did a termite inspection, we found out 2 walls, like all the way up, almost to the headboard, were eaten up with termites. I mean, it was structural problems the buyer didn't even know about. Or the seller, excuse me. The seller had no idea that he had termites, much less 2 walls were eaten up with it. So there was a whole problem there, and we couldn't justify the price. So at that point, we shook hands, parted ways. But that's for the other stuff. I've had burned rooms where we got fire damage. I've had pipes busted. I've had all kinds of stuff. Most of the stuff that I can see when I walk in to make the instant offer, no problem. We just build that in. I understand we've got to do that. It's when the unknown stuff that we don't know. And it's massive. I mean, pretty much every house uncovers something that I didn't anticipate. That's just the nature of this business. So I almost build in a unanticipated number just to make sure. So, and we've closed all those. Which literally that one's the only one we hadn't closed. But for the most part, everybody has a good, confident number that they know they can get. And if we get better, great. If not, don't worry about it. You know that you walk into the market with that confidence. All right, a little bit longer show than normal, but I wanted to give you a little history. I wanted to let you know how things are going there. So I appreciate you watching. Have a good week.
I'm a man on a mission.
My mission is to help people break through all the noise out there and
Don't need no permission.
I want to help you get to actual truth. Don't you just want the truth?